this to Tucker Carlson on television. I said, I'm going to be buying the top forever. I mean, here's what I tell you. When Bitcoin's $1 million a coin, I bet you I will probably buy $1 billion of it at $1 million a coin, probably in one day. And when it's 2 million, I will probably be doing it again in one day. And when it's 10 million, I will be doing $1 billion or more in one day. Right?
What's going up, bull runners? Welcome back to the channel. Imagine this, the crypto market humming in the background, prices flashing on your screen, and suddenly a shadow creeps in. Something shifting, something big. You feel it, don't you? That uneasy ripple in the air. Today, right now, as you sit here watching, XRP, the fourth largest crypto, is flashing a warning sign called a death cross on its hourly chart, and it's eerie, isn't it? A signal that could mean a dip or maybe something even more unexpected. And then there's Bitcoin, the king of crypto. A new report just dropped. Only 4% of the world owns it in 2025. Shocking, right? Billions of people, yet so few hold the key to this digital gold rush. What does it all mean? Where is this wild market taking us next? You're about to find out. Stick with me, because in this next few minutes, I'm peeling back the curtain on these mysteries. XRP's next move, Bitcoin's quiet takeover, and more headlines shaking the crypto world today. This isn't just news, it's the pulse of our future profits. Time's ticking. The market doesn't wait. And here's the kicker. If you stay with us until the end, I've got a bonus for you. I've got a sneak peek into our Altcoin Pro, our crypto community with over 1,000 members, where we're sharing great info with each other. And we have analysts giving tips and tricks for your crypto portfolio, whether it's bull market or bear market. So if you're like most people where you don't have the opportunity to spend hours a day in the crypto news, make sure you subscribe today, because that's what we do. And we bring that to you in a condensed manner. And if you're still feeling bullish about this current bull run, let me know by commenting 777 down below. We will also be jumping over to X to find out all of the breaking news that's happening in the crypto world today. We'll be taking a look at the XRP charts. There are some very key support and resistance levels in front of us. We'll make sure we cover those. Also, our short-term weekly momentum indicator has hit a bottom, so it is time for it to start to move to the upside. This week could be the next week of our big breakout to the upside. Last time this indicator reset to zero was here, October 28th, and then the very next week, moonshot to the upside. But first, let's head over to CoinMarketCap, check out the overall health of the crypto market. Not healthy at all. As we know, it's currently sitting at 2.68 trillion, only $92 billion worth of volume yesterday. Fear and greed index all the way down at 17. Last week was 39 and yesterday was 24. As you all saw, that overnight scenario, Saturday night into Sunday afternoon, was not a very exciting situation for crypto. But could this be the bottom? We'll take a look at that when we look into charts at the end. Altcoin season index currently sitting at 18, up from yesterday, which was 17, but still not very optimistic. Obviously, we are currently sitting in Bitcoin season. We need to see this start to move back to the upside, where we can make our way back into altcoin season in the 75 territory. Right now, still sitting at 18. No new report for the crypto ETFs, but just a reminder, it has been an absolute bloodbath to the downside. The March 6th report was minus $433 million. But there are some signs that positive things could make a turnaround. Top 5 coins trending on CoinMarketCap today. Number 1, Bitcoin. Number 2, Fort Knox. Number 3, Ethereum. Number 4, XRP. And number 5, Solana. And our top 5 cryptos by total market cap: Bitcoin coming in at 1.6 trillion, Ethereum at 246 billion, Tether at 142 billion, XRP at 125 billion, BNB at 80 billion, and Solana at 64 billion. Heading over to X, and we got Random Crypto Pal posted this video of Michael Saylor absolutely going nuts, saying, I bet you that when Bitcoin's 1 million, I'm buying 1 billion, and in a single day. When Bitcoin's 2 million, I'm buying 1 billion in a single day. He doesn't care if he's buying the top. When Bitcoin is 10 million per coin, I'm buying 1 billion in a single day. So obviously the ultimate Bitcoin maxi, Michael Saylor, very bullish. And with these dips, he's probably super exciting because he's getting some better pricing. Just in, Binance founder CZ says too much money is spent chasing small, quick gains in crypto. Focus on ethical teams that build for the long term. Big money is built slowly with stamina. And this is what I've been waiting for. Altcoin Pro, our crypto community on X. You can make sure you follow them as well. Altcoin Pro at altcoin pro _. We've got rumors that countdown to rate cuts has begun. Markets expect their first cuts around May or June. When they hit, liquidity floods in. Bitcoin won't just rise, it will detonate. So here are the dates coming up in the future: March 19th, May 7th, June 18th, July 30th, etc. And then here are the potential chances of the interest rates coming down to this level here, 425 or 450. We're in that area right now at 4.5. So as we check in right here on our United States interest rate charts over on TradingView, we can see we're currently sitting at 4.5, but they are expected to have a reduction in these. There's a 12% chance that in March, we could be dropping down to 4 or 4.25, and that goes significantly up in the May meeting and also in the June meeting. But in the June meeting, they're starting to get potential moving into the 3.75 and 4% interest rate, which would be absolutely huge. Companies can borrow tons of money. They can start hiring people. They can pay their people better. So we do need interest rates to drop. In fact, there's been a lot of talk about with the Trump administration, the reason that he's continuing to do what he's doing right now in the beginning of the administration. And he's working towards Jerome Powell bending the knee and finally starting to cut rates. So the economy is feeling some short-term pain, but we're looking for the long-term gain. Also, big news here, whales are finally back. And this could indicate that if the trend continues, bullish momentum might soon be triggered, as it has often been in the case in the past. So as we can see right here, money flow coming into the market, money flow starts coming out of the market, bulls coming back into the market, bulls start coming out of the market. And as we can see, this is when prices started hitting those new tops, new all-time highs. But February in the beginning of March has been to the downside. But as you can see right here, it has now peaked above the zero line. And this is getting up into the levels here. So they are accumulating. And this is total whale holdings and monthly percentage change. All right. So we got the purple, which is the big flow area that says 30-day percentage change. It's plus 0.7% percentage change, which is significant. The black line is the price, obviously the Bitcoin price. Total balance, these are the total balance that whales are holding. So you can see right here at the beginning of January is when they started selling off. There was another accumulation phase. And then at the beginning of February, they've been selling off. And now they are starting to accumulate into March. So let's jump into our first major headline for the night. Only 4% of the world's population holds Bitcoin in 2025. Despite the growing popularity of Bitcoin, the number of individuals who actually own it worldwide is minuscule. And this is so great. It's like we've all been talking about. We are front-running, well-won institutions. Those people that were in crypto last year, the year before, many years ago, before even banks and before even governments and before even states were thinking about buying any crypto, Bitcoin, XRP, any of it. You were there probably. You are a genius, and that's why you watch our channel. That's also why you subscribe. Make sure you smash that thumbs up, smash that subscribe button.
We just launched Altcoin Pro University, where our research team gives you real-time altcoin picks with explosive potential for this bull run, along with 100+ expert curated classes crafted by industry experts to discover these gems yourself, on top of our live weekly calls every single week for in-depth crypto market analysis and daily updates. And that's just a fraction of what we offer inside of Altcoin Pro University. Just go through the link in the description below, get in right now, watch the 26-minute video covering everything that Altcoin Pro University offers.
Only 4% holds Bitcoin, with the highest concentration of ownership in the United States, where an estimated 14% own Bitcoin. According to research report from River, a BTC financial services company, North America remains the continent with the highest adoption rate among individuals and institutions, while Africa is currently the lowest at only 1.6%. Overall, Bitcoin adoption tended to be higher in more developed regions than in developing regions. River estimates that Bitcoin has only achieved 3% of its maximum adoption potential, signaling that the digital currency is still in the early stages of global adoption. So let's talk about adoption. Bitcoin adoption, crypto adoption will be even less. And here are the stages of categories when it comes to getting invested innovators. So if you're listening to this, you're part of crypto, you are an innovator worldwide. These are the risk takers. These are the people that adopt the issue first. Okay. That's 10 or that's 2%. Then the early adopters come along, and that's 13.5%. These are opinion leaders who adopt early but cautiously. So they're involved, they're getting rolling. So if you're in these stages before this mass amount of people flood in, another 34% just automatically will come in. That's when you get the hockey stick graph. The early majority, 34%, is the pragmatic folks who adopt once benefits are clear. And then the late majority, when you're already in, you're already collected all your gains, 34% skeptics who adopt after seeing widespread use. And then the laggards, they're just coming in too late because they're going to be forced to use it. Those are traditionalists who resist until absolutely necessary. So let's talk about 3% adoption. Bitcoin in 2025, online banking in 1996, and we know where all that, everyone is online. Social media in 2005, everyone's using social media now, and adoption was extremely crazy. And then, of course, the internet in 1990. So if you're in here during this slow growth, it could be painful, to get to 100,000 in Bitcoin. Some people bought it at $30, $2,000, $15,000, $20,000. Now we're at 100K. Imagine where it's going. That's why when you hear Michael Saylor talking about Bitcoin getting to $1 million per coin, if adoption truly kicks in, then yes, the graph starts to go parabolic to the upside. The financial services company arrived at 3% figure by calculating Bitcoin's total addressable market, which includes governments, corporations, and institutions, at only 1%. Rival also took institutional underallocation and individual ownership rates into account to arrive at the 3% metric. So the reality is it could seriously be under 3 as well. Although Bitcoin, and because you also got to think about a lot of people have multiple wallets. Although Bitcoin has come a long way since its early cypherpunk days, recently becoming a U.S. government reserve asset, several hurdles stand in the way of Bitcoin mass adoption on a global scale. And here are the estimates of percentage worldwide, estimated Bitcoin ownership by country. North America is at 10, South America is at 6, Africa at 1.6, Europe at 3.4, Asia at 3.6, and Oceania at 3.3. But what is stopping the mass adoption? Bitcoin stands at the intersection of technology and finance. Two topics are dense enough on their own, let alone together. The biggest problem facing Bitcoin's mass adoption is a lack of financial and technical education, which fuels misconceptions about Bitcoin, including the idea that it's a scam or a Ponzi scheme. The total value received by country by asset type from July 2022 to 2023, a 2023 report from Chainalysis revealed that stablecoins were the most widely transferred digital asset in Latin American countries. And as you can see, stablecoins are in blue, and here's the graph representing those. For Argentina, Brazil, Colombia, Mexico, and Venezuela. High volatility disproportionately affects residents in developing economies who have turned to US dollar stablecoins as a digital store of value due to their low transaction fees and relative stability compared to other cryptos. During the recent White House Crypto Summit on March 7th, United States Treasury Secretary Scott Bessent announced that the U.S. will use stablecoins to ensure US dollar hegemony and protect its status as the global reserve currency. So remember, as you are going about your daily activities, you are a crypto evangelist. The more you tell people about crypto, the better it is for everyone, because the more adoption comes along, the more liquidity comes in, and everyone wins. All right, now we do have a market analysis here coming out stating that the hourly death cross has formed on XRP. So what's that going to mean? We're going to read over this and we'll look into the charts and see what's going on. And we'll find out those very important support and resistance levels. Also, even though a lot of technicals are starting to show bearish, and we talked about this yesterday and the day before about how all of these lower time frames were extremely bearish and there was potentially more drop coming, the larger time frame of the week is very important, and a new weekly candle has started. If we can build momentum in this weekly candle, all of this right here would be, who cares? Because we will turn back to bullish, and I'll show you that here in just a minute. But there is a death cross on the hourly chart, which many traders deem to be very bearish for momentum. And this pattern occurs when the short-term moving average dips below the long-term moving average and has emerged in the present market uncertainty. So what we're looking at right here in front of us is the hourly chart. And the blue line, as you can see right here, is the 50 simple moving average. And the white line is the 200 simple moving average. So when price gets below the 200 exponential moving average or simple moving average, and then you also get a 50 cross, things can get nasty and bearish, as we've seen here. Once this cross happened, we can see it was trading sideways accumulation mode. We cross over to the downside and we have the drop down. We drop from 230 down to 213 and even a little bit lower. But this 213 is going to be a good support level for us. And if we go historically and just look back, we can go back to like January 11th here. Price crossed over the 200 exponential, then the 50 crossed, had this crazy dip down, but then it started to really rock to the upside until we got the bearish cross. And then that bearish cross doubled up here, and we had that crazy drop that did the wick on all of crypto down to the downside, $1.77 on XRP. But you can see that it is more bearish when the 50 crosses to the downside. So for those of you guys that are new and wanting to use TradingView, the 50 moving average takes the last 50 1 hour, or it doesn't matter, it's whatever time frame you're on. We're on the 1 hour right now. Takes the last 50 1 hour candles and calculates that price. So it smooths out. So it doesn't go like all of this. It smooths out the price over the last 50 1 hour candles. That average price right now is right here at $2.28. And then obviously on the other moving average we have, which is the 200, it takes the last 200 candles and smooths it even more because it's over a longer period of time. And that is currently sitting at $2.44. But we did just have the death crosses, they call it, the 50 simple moving average crossing below the 200 simple moving average. Now, what is also interesting, if we go up a time frame, now we're up at the 4 hour time frame. We had the death cross here. We did bad during that scenario. But look at where we're at right now. So the 4 hour is getting extremely close to making a bullish cross. Now, first of all, price has to get back above the 200 exponential moving average, and then the crossover to have that valid. If it's below the 200, it's still bearish. But let's take a look at what happened back here in November. So price was below the 50 exponential move, or the 50 simple moving average, finally crossed over the 200. Price was above, and we made a move to the upside. And we actually stayed above that 50 simple moving average the whole time. Then we had a little pullback here, got a little bearish even during the cross. We had the pullback to $1.98, pushed back up, but then confirmation happened when the bullish cross happened here, and price made the move up to the new all-time high. So that's a higher time frame, 4 hour. It is also reading bearish, but we could get that cross here soon, but price has to obviously get back above it. Let's go to the 12 hour. So the 12 hour just had a death cross on the 12 hour. Just a couple of days ago, it crossed over on March 5th, and we have been dropping ever since. And if we look here on the daily chart, this would be catastrophic if we were to make it all the way to the daily chart, because as you can see right now, the 50 moving average is at 262. The 200 is all the way down at 160. If that made the drop all the way down there and then also made the cross, we would be in some severe pain. Personally, I don't see that happening unless World War III kicks off or something ridiculous like that. But you do have to look at all of the time frames. And then let's look at the weekly time frame. Like I said, the higher time frames, we're still so bullish. I mean, we've got the cross here and then the accumulation, but we're still riding above the 50 moving average. I mean, that is coming in all the way at $1.18. Let's check the 3-day. So here's an interesting scenario. We got the 3-day moving average currently coming in at $1.96 and still continuing to move to the upside. So let's check the 2-day and see if it bounced off of it. On the 2-day, we're actually below it. So on the 3-day candles, it's an interesting scenario that could potentially be playing out here, because the next 3-day candle, this moving average comes up to this level. Are we consolidating before testing off that? We don't have to do that. I personally feel looking at the weekly charts on my spider lines, weekly spider line scenario here. So if you're not familiar with what the spider lines are, if you take the price drops on the weekly candles during the 2018 price and you draw a ray with the center point hinged at the April 19th, 2021 high, it draws a line into the future. So to give you an example, let's grab a ray. We'll just take it off of this candle here and we put it on this right here. We have to make it huge so we can see that it's different than everything else. We'll make it red. Okay, so you see how this red line just appeared right here? That one comes from back here, but we're just doing an example, so we're not going to actually use that one, but that's how you do it. It's very simple. But what I want to show you is this right here. This is what I'm most excited about because we currently have a reset on the weekly shaft trend cycle. We are bullish on our weekly wolf pack. Someone asked in the comments, what's the setting? All you got to do is change the setting on the wolf pack to 10 for the fast length, 30 for the slow length. And the shaft trend cycle is the same. Fast length is 10, slow length is 30. But the reason I'm excited about this is this week we're just kicking it off. We're up 1%. But coming Monday, we start to get some moves to the upside and we get a green candle and then we get our shaft trend cycle, our short-term momentum wave indicator. It's different than an RSI, but it moves to the upside. Look what happened last time we moved from the zero line right here up. So the zero line was the last red candle, which was the October 28th weekly red candle. The very next week, we were to the upside, November 4th. And that's when we really started moving to the upside. Well, last week, we got the big red candle that helped put us to the zero. Now we can make the move to the upside. That's what I'm following right now. That's the closest scenario for extreme bullishness I can get. But the reality is we could also ride this out along the bottom and then this continues to drop to the downside. So bearish wise, what I did is we're going to go to a clean chart here. So what I do is I go over to my candles and I select Heikinashi, and then we're going to go to a different time frame. We're going to go 12-hour. And as you can see, there's an interference. There's a 12-hour support zone right here, but we need to find something that's support in this area, right? Where this box is drawn. Let's delete that. But we need to find a time frame where we get support in this level. So right now we're on the 8 hours. So there's still no support there. Let's go to the 4-hour. And right there, we finally get, because all of this green smooth move to the upside, because it's Heikinashi, but there's a crazy interference right here, right? Isn't that weird how there's this one little interference spot right here, and then there's the move? Well, that is our key level right there. And as you see, it's tapped it once. It's broken through it once. But if we lose that level with a closed candle, not a wick like we had here, we could be in for some severe pain, getting back down to $1.47 range, etc. Okay, so that's our most important level. But I want to find out, is there something where we're sitting right now that could help us determine if we're going to bounce here? So if we drop to the 2 hours on the Heikinashi, we're here. Scroll over to the other side, see where we're at. No, we're not there. So that's good news. All right, so the 2 hour, we're safe. We drop to the 1 hour. And even right now in the 1 hour, we're safe. This whole move to the upside. So the most realistic scenario that we could see happen is if we stay bearish, we continue to drop down, we're probably coming to that $1.90, which also works out pretty well because that is also the top of this area over here from the 2021 level. So $1.90, extreme key level. But let's go bullish. I want to be optimistic here, guys, because I think we can start to be optimistic. We just have to have some continuation come in right now. This is the most important time where this starts to turn up on the weekly. So what do we need to look for to the upside on the weekly? Well, we need to break this level, which was holding as a support before, $2.23. Then we move back up to the 250. Then we're going to come into play with our 280. And we'll drop to the daily charts here. You can see 280 was the body candle close prevention move here. It was also the most recent rejection here, besides the crazy Donald Trump announcement, strategic reserve candle, which was just a fake candle. As we can see, we've lost all of that momentum. In fact, it would have been better we didn't hear that news and we were slowly working our way back up. Then we can also take a look at the ray here. And as we see, support on this channel to the upside is right here. The resistance of the ray is here. So this is literally the most important thing that we have to get back above the 250, 255 level and have this become a support. Okay, so this has to be clear support here. Then we can move back to 280. Then we can get to that $3. Then we can get to 330. But if we look on the daily, we have a potential bad scenario. Our short-term momentum wave has turned to the downside, and our long-term momentum wave has been bearish for quite some time, and it has not even started working its way back up to the zero line. So this week is a very key week because we could definitely have like a head and shoulders pattern playing out right here in front of our faces, which would be to the upside and get very bullish. And we have seen price come up here, retest, and our short-term trend momentum wave indicator came and retested this exact level that it's at now and started moving up. So I'll be paying very close attention to this in the next 24 to 48 hours. Monday and Tuesday is very important. Let me know your opinion down below.
April 15th, 2025. This is a huge date because it's the deadline for 2 high-paying tax credits that you probably haven't heard about, but you can still get if you take action right now. We've partnered with the relief consultants who are experts in the tax code who've recovered over $100 million for their clients so far. So if you're a business owner or an entrepreneur, listen up so we can get you help and reach our goal of recovering $10 million for the Bull Runners community before the April 15th deadline. So here's how it works. If you're a business owner who had employees in 2021, then you qualify for an average $150,000 check from the Treasury and possibly more with the Employee Retention Credit Program. So if you were told in the past that you don't qualify, get a second opinion now through the link in the description below this video, because there are rules and regulations that have changed just recently. So there's a high likelihood that you do qualify now. And if you sold your business or you shut it down, you still qualify as long as you were active in 2021. So don't miss out. Schedule an appointment with the link below. Just click business owner with employees if it applies to you. There's also a second tax credit that also ends April 15th. So this is for the bull runners who are self-employed in 2021. So if you were a 1099, not W-2, and self-employment was your primary income, the Treasury check for this tax credit can go up to $32,220 with an average of $17,000. So if you were self-employed in 2021 and want to see if you haven't claimed this credit, which nobody has from our community thus far for some strange reason. We've been talking about this in several videos. I don't know, man. Maybe you just want the Treasury to keep your money. But if you want to get money back in your pocket, then schedule a consultation. Don't be lazy. Do this right now before April 15th through the link below. Just click self-employed if you think you qualify for both credits. Let the rep know on the call. And by the way, if you have your tax returns from 2020 and 2021 for this credit, it will be a faster turnaround for you. So have them ready on your call, and they can literally tell you if you qualify on your first call to get you paid. So if you need more money back in your pocket for this bull run, take action right now, click the link, and let's get you paid.